but in some cases, interest-only loans may be available. With an interest-only loan, the regular repayments or the regular payments made by the customer are only to meet interest cost, with the full capital amount being outstanding throughout the term of the loan. The customer will then need to find or to have the customer will need to have funds available to repay the capital at the end of the mortgage. I wouldn't recommend this like to anyone, even for myself. If I'm borrowing money today to buy a house, say I borrow 1 million to buy a house, and then the term of the loan is 20 years. During the 20 years, I'm only paying interest. But at the end of the 20 years, I have to have some 1 million somehow to pay for the house. If I don't have that 1 million today to buy the house, where am I gonna get the 1 million in 20 years? So yeah, that type of arrangement, I don't think it would be a good idea to anyone. It's like it's like a balloon payment for cars, eh? Like you don't have deposit for your car. You don't have right now. You say you buy a car, you don't have a deposit to put down when you buy that car, but then you have a 40% balloon that you will have to pay at the end of the car, at the end of the term of that loan. So if you don't have the deposit right now to pay towards the car, where are you going to get that 40% balloon at the end of the loan? So some of these financial arrangements, I don't know with people who take them. But then, yeah, there are options, but there are options. The good thing is that there are options. What works for one person may not necessarily work for another person. Maybe for the other person, it is more important to own a car right now than stressing about balloon payments that will only be in 6 years' time or whatever the contract says, right? But then for other people, yes, we do want cars, but financially we shouldn't be under strain, right? Because saving, especially in South African economy, is quite difficult to save money. It means that if you have a balloon attached to your car, for example, during the term of that loan, you should be saving up money towards paying for that balloon payment. If you are not saving or putting money aside to cover that balloon payment at the end of the loan, it means that you could have to give up your car if you can cover the balloon, or you could opt to take a personal loan to cover the balloon payment, right? So with a balloon payment, your installments will be less, right? But your installments being less, you should be able to save up money for that balloon payment, right? If you are not saving up money with your less installments, where are you going to get the 40% balloon to pay towards a car, right? So interest-only loans and the balloon payment arrangement or the residual value arrangements, I wouldn't recommend to anyone or to myself. Okay, so now